The Cold War is usually presented to us as a clash between two ideologies, capitalism and communism, freedom and equality, East and West. But the real story was far more complex. This era was also a multi-trillion-dollar power game, a giant financial stage on which both America and the Soviet Union tried to shape the world through their economies. Behind every missile test and every diplomatic statement, there was a spreadsheet. Behind every enemy narrative, there was a transaction. And this is exactly where the financial historian comes in, to understand how money, power, and history intertwine. When World War II ended, the world seemed to split in two. On one side was the capitalist bloc led by the U.S., on the other, the communist bloc led by the Soviet Union. On paper, two opposing ideologies, but in reality, these two blocs were far more connected than we usually think. The United States hadn't just won the war, it had also acquired most of the world's gold. In 1945, roughly two-thirds of global gold reserves sat in Fort Knox. This gold made the dollar the new foundation of global finance. Through the Bretton Woods system, the dollar was pegged to gold and became the world's reserve currency. This wasn't merely an economic decision. It was a strategic imperial blueprint that placed the dollar at the backbone of the global system. If the world wanted to trade, it had to use dollars, which meant dependence on U.S. approval. The Soviet Union appeared to be moving in the opposite direction, with strict currency controls, a closed economy, and the ruble zone. It built its own financial wall. But no matter how hard it tried to stay isolated, it still had to import technology, machinery, and sometimes even food from abroad. And for that, it needed a strong currency, meaning dollars. This is where the silent paradox of the Cold War emerged. Two powers that ideologically denied each other were actually bound by an invisible financial connection. After the war, the U.S. launched the Marshall Plan, providing $13 billion in aid to Western Europe. The official story was helping allies rebuild, but behind the scenes the goal was clearer: tying Europe to the dollar system. Countries that accepted aid were required to use American goods, and work with American companies. Economic dependence was being created. The Soviets rejected the plan, but the reasons were more practical than ideological. Accepting it would have meant openly admitting the fragility of their system. Still, trade found secret paths. In the 1950s, Soviet oil began being repackaged through neutral countries and sold to the West in exchange for dollars. While everyone broadcast propaganda, the real economy quietly connected both sides. During this period, both the CIA and the KGB turned money into a tool of intelligence. The CIA funneled funds into coups, wars, and propaganda through off-the-books black budgets. Offshore companies, fake foundations, and hidden accounts were created to manage these flows. The KGB used similar tactics, not for profit, but for access to Western technology and markets. Money became the shared language of both sides. By the 1960s, the Eurodollar market emerged in London. Pools of dollars outside the U.S. created opportunities for both Soviet and American entities. Soviet banks couldn't open accounts directly in New York, but through intermediary banks in London they could access the loans they wanted. Ironically, the American financial system designed to contain communism ended up indirectly financing it. By the 1970s, these economic ties grew even stronger. The Soviets exported oil in dollars. During the very years Reagan called the USSR the evil empire, the Soviets held billions of dollars in Western banks. Meanwhile, American companies like Pepsi and IBM quietly found ways to continue trading with the USSR behind the scenes. Viewed from a wider angle, the Cold War starts to look less like a moral struggle and more like a massive business model. The arms race was an economic stimulus package. Every missile developed, every defense budget expansion turned another gear of the economy. The American military-industrial complex became a primary engine of growth. The Soviets mirrored this on their end: tanks, missiles, aircraft, all sustained by Western technology and credit. Beneath the surface, both sides depended on debt, energy, and each other. When Nixon ended the gold standard in 1971, the dollar lost its physical backing but paradoxically grew stronger. The U.S. could now print money without limits and convert that limitless money into power. The petrodollar system followed. Through secret agreements with Saudi Arabia, oil could only be sold in dollars, making the dollar the indispensable bloodstream of the global economy. The Soviets, meanwhile, turned oil into their lifeline. As Western economies were shaken by the 1970s oil crises, Moscow enjoyed record revenues. Those revenues flowed back into Western technology and credit. The West conveniently looked the other way because European factories ran on Soviet oil. Thus, the two enemies became financial partners. The Cold War never turned into a nuclear conflict, not because of morality, but because of the risk of mutual economic destruction. Destroying your enemy also meant destroying your own credit. So the real battles shifted to the Third World. Latin America, Africa, and Asia paid the price of this massive financial chess match. When the Soviet Union finally collapsed, many assumed ideology had been defeated, but in reality only the curtains closed. Oligarchs simply took over the trade networks they had controlled during the Soviet era. They didn't become billionaires overnight. They had already been there. They just no longer had to hide. Today we see that the Cold War didn't end. It changed shape: financial sanctions, energy pressure, currency wars. All are continuations of that era. The Iron Curtain is gone, but digital curtains have taken its place. And if you follow the flow of money, you'll notice the same game still being played. Because in history, power was never truly about ideology. It has always been defined by liquidity. If you enjoyed this perspective, don't forget to follow for more. History has a lot to say. The key is knowing where to look.